Unmasking BlackRock's profits, how they quietly dominate global assets. What if one company held the keys to all corporations worldwide, controlling enough wealth to sway governments and economies across the globe? Meet BlackRock, the trillion-dollar asset giant you likely never heard of. BlackRock sits silently in the shadows, unknown to most, yet this financial mammoth influences everything from your favorite apps to your retirement funds. BlackRock's sprawling reach stems from managing assets worth trillions. But how did one firm capture so much power and capital? Let's unpack BlackRock's earnings, assets, and controversies, exposing how their tentacles subtly shape our lives, from the companies we rely on to the social causes we care about. But before we begin, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on amazing and entertaining content. BlackRock's total assets. Alright, let's start by looking at the numbers. Even with all the market turbulence, BlackRock still managed to grow assets under management to a whopping $9.4 trillion. I'll say it again, $9.4 trillion. Just stop and think about that giant number for a minute. How much money is that, really? Well, if you took $1 million in $100 bills and stacked them up, it would be about 4 feet high. Now imagine stacking up $9.5 trillion. That tower of cash would be 950,000 feet tall, over 180 miles high. It's just an insane amount of money that this one company manages. To put it in more concrete terms, $9.5 trillion is more than the annual GDP of any country except the US and China. It's nearly half of the entire US GDP. This amount of money is just staggering and hard to comprehend. What's even more mind-blowing is the growth rate. Just 5 years ago, BlackRock was managing $5 trillion in assets, so they've nearly doubled their cash pile in a few short years. Where does it end? BlackRock's astronomical size gives you a glimpse into the massive consolidation of money that's happened in the asset management industry. The rich keep getting richer while controlling ever larger slices of global wealth and capital. So how much of the world does BlackRock actually own? Alright, we've covered the basics of what BlackRock is and how much money it manages. Now let's dig into the numbers on their global influence and ownership stakes. To recap, BlackRock has over $9.5 trillion in assets under management. That's an insane amount of money. But how much actual ownership and voting power does this translate to? Well, BlackRock is the single largest shareholder in companies like Apple, Microsoft, Amazon, Facebook, and ExxonMobil. Think of the most dominant corporations in America. Chances are, BlackRock owns the most shares. For example, BlackRock owns 6.2% of Apple. They own about 7.1% of Microsoft. 7% also gives them solid voting power to influence decisions. But BlackRock's reach goes way beyond just the largest U.S. corporations. Globally, they are a top 10 shareholder in nearly every major company across the world's stock markets. They manage massive stakes in the leading companies in Europe, China, India, and Latin America. So, BlackRock has a presence on pretty much every continent. Alright, so BlackRock has trillions of dollars under management. But where does all this money come from, and why does it matter? Where BlackRock gets its power. Well, BlackRock mainly manages money for big institutional investors like pension funds, endowments, and sovereign wealth funds. On top of that, BlackRock runs the world's largest ETF business. Their iShares ETFs have over $3 trillion in assets. With all of this money invested, BlackRock ends up owning shares of pretty much every major public company in the world. And we're not talking tiny fractions here either. They are often the largest single shareholder. For example, BlackRock owns over 6.2% of Apple. It's the biggest shareholder of ExxonMobil, Microsoft, and Chevron too. Essentially, this one firm has huge influence over corporate America and major companies around the globe. The Canada Pension Plan, I mentioned, holds over $100 billion with BlackRock. But get this, the total amount of money BlackRock manages from pensions and retirement accounts is $3 trillion. That's the entire retirement savings of millions of everyday people like you and me. Our future livelihoods depend on how BlackRock invests this money. Beyond pensions, BlackRock also manages over $2 trillion for central banks and sovereign wealth funds. This gives them huge sway over the economies of entire nations. No other asset manager comes anywhere close to BlackRock in terms of sheer size and reach. So how did they get this big and powerful? Well, BlackRock has gobbled up competitors and grown at breakneck speed under the leadership of founder and CEO Larry Fink. Some call Fink the most powerful man in finance. The rise of passive investing and index funds has also fueled BlackRock's ascent. Their iShares ETFs make it easy for regular investors to get instant diversification. So, between acquisitions, steady leadership, and investing trends, BlackRock sits in an extremely lucrative position. They have their hands in practically every pot when it comes to global capital flows. The questionable practices of BlackRock now: is it problematic to have so much power concentrated into one asset manager? Well, some people raise concerns about corporate governance issues and anti-competitive behavior. On one hand, BlackRock says it actively engages with company management teams and pushes them to improve environmental, social, and governance practices. But critics argue this level of ownership influence can reduce competition. For example, BlackRock is the top shareholder in both Delta and United Airlines. There's little incentive for those companies to battle for customers when their biggest investor is the same. There are also worries that index funds like BlackRock's could skew stock prices from fundamentals, since they buy and sell based on formulas rather than each company's performance. Being such a huge shareholder across so many companies gives BlackRock a tremendous amount of behind-the-scenes power. They have access to top executives and backroom discussions that most investors don't get. This insider influence is great for BlackRock's bottom line, but questionable for the free market. BlackRock argues they take this power seriously and use it sparingly for the benefit of regular investors. But regulators are increasingly concerned about anti-competitive practices. For example, BlackRock owns majority of the stock in some of the largest U.S. banks. They even own shares across competing banks, so there are concerns about them favoring certain banks over others. The EU recently banned BlackRock from owning significant portions of multiple banks in a country. Regulators cited fair competition concerns. So while BlackRock touts good governance, world governments are clearly wary about the unchecked power of this trillion-dollar giant. Consolidating this much money and influence in one company should raise eyebrows. In 2020, BlackRock made a big deal about integrating sustainability into its investment decisions and pressuring companies to be better corporate citizens. On the surface, this sounds great, taking social responsibility into account rather than just profits, right? Well, activists have called out BlackRock's hypocrisy between its rhetoric and actions. See, BlackRock remains heavily invested in oil and gas companies. It's the world's largest investor in coal plant developers, and its third largest holding is controversial company Tesla, which has faced various ESG criticisms. When pressured to divest from fossil fuels, BlackRock says it can influence these companies better with a seat at the table, but results have been mixed, at best so far. Beyond the environment, BlackRock also faces backlash for investments linked to human rights abuses. For example, the company has increased investments connected to forced labor in China, like surveillance tech used to oppress Uyghurs. Clearly, there are discrepancies between the sustainable image BlackRock wants to project and where it actually puts money to work. More greenwashing than meaningful impact, according to critics. Despite leading the push, BlackRock has been very slow to back up its ESG talk with meaningful action. Fossil fuel investments still make up a large chunk of holdings, despite urgent calls to address climate change. When it comes to social issues, BlackRock faces criticism for remaining invested in companies like Amazon and Tesla, despite concerns over worker treatment. Their record is spotty on pushing weapons manufacturers and polluters to improve. Pledges on climate focus on gradual change rather than the radical action many experts say is needed. So, critics allege that ESG for BlackRock is more about marketing than meaningful impact. The trillion-dollar heavyweight wants good PR while still chasing profits from controversial companies. This have your cake and eat it too approach ultimately rings hollow, and it raises valid questions about whose interests BlackRock truly has at heart. Looking forward, BlackRock will likely continue raking in huge profits. Markets permitting, that multi-trillion-dollar cash pile under management should keep growing. This means the firm's power and influence across the corporate world will keep expanding too. BlackRock truly sits in the driver's seat when it comes to the global economy. Some argue we need regulatory solutions like ownership caps to limit this unprecedented consolidation of money and power. But any pushback would face immense resistance, so change won't come easy. In the meantime, all we can do is stay aware of who wields influence in the world and how responsibly that power is used. Because BlackRock impacts our lives more than we realize, from the companies we shop at to the returns on our retirement accounts. In the coming years, we need to monitor if BlackRock lives up to its promises on sustainability and governance, or if it continues business as usual while dressing things up with slick ESG talk. If real change doesn't come, calls for tougher regulations will rightfully intensify. That kind of backlash could be bad for BlackRock's image and continued growth. So, let's wrap up our deep dive on how much of the world BlackRock really owns. This company is one to watch closely in the years ahead, because like it or not, BlackRock holds major sway over our financial futures. The decisions they make today will ripple through global markets and entire societies for decades to come. Their power comes with great responsibility. Let me know your thoughts in the comments below. Do you think it's problematic that one company wields this much global power and money? Should there be more oversight and regulation when it comes to massive asset managers like BlackRock? And if you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Thanks for watching, and we'll see you in the next video.